A warm welcome to our listeners tuning in, especially from stocktelescope.com. Welcome to the deep dive. Today we're diving into a company, well, you probably know it very well, PepsiCo. That's ticker NASDAQ. PEP.
Yeah, and just before we really get started, the usual but very important reminder here. This deep dive, it's purely for informational purposes. It is definitely not investment advice. So please always do your own research. Maybe talk to a licensed financial advisor.
Exactly right. So our mission today is to unpack what our sources are calling a really interesting investment thesis for PepsiCo. It's described as a defensive value play with transformation upside. Let's dig into, what makes it look intriguing right now. Okay, starting with that value play part. The numbers, well, they make a pretty strong case on the surface. The stock's currently trading around, $129.07, which is a big drop, nearly 29% down from its 52-week high of about $181. That's significant for a giant like PepsiCo.
It is. And that decline has brought the valuation multiples down to, more attractive levels. Yeah. Talking about 18.98 times trailing earnings and maybe 16.16 times forward earnings. Yeah. Pretty reasonable. But what really jumps out, especially for income investors, is that dividend yield.
Right. The dividend.
That's at 4.41%. That's actually one of the highest yields it's offered in years. And remember, this is a dividend aristocrat. They've increased that payout for over 52 consecutive years. So that offers, substantial income appeal and maybe some downside protection too.
Okay, solid dividend seems like decent value. But the stock did fall almost 30%. So why? What happened, particularly in Q1 of 2025, that kind of spooked the market? What's it telling us about consumers?
Right. Q1 gives us some clues. Net revenue actually fell by 2%, down to about $17.9 billion. And they had a slight miss on earnings per share, just a penny short of expectations. But I think the bigger signal was the volume pressure. North American food volumes were down 1%.
Okay.
And beverage volumes in North America dropped 3%. That really shows you how sensitive consumers are to pricing right now.
People watching your spending.
Exactly. And the whole operating environment is, well, challenging. You've got currency headwinds. The strong dollar basically shaved off 3% from revenue. Plus things like tariff pressures, adding costs, and commodity prices are higher. It squeezes margins. It led management to actually reduce their full-year EPS growth forecast down to essentially flat for the year.
Yeah.
They're acknowledging it's tough out there.
Okay, so challenges are definitely present. But as the thesis suggests, PepsiCo isn't just, weathering the storm. They're actively driving this transformation upside. Talk about these acquisitions. Siete Foods and Poppi sound particularly interesting.
Yeah, they're making some really strategic moves here. It's not just bolting on sales, it's about pivoting. They bought Siete Foods back in January for $1.2 billion.
Yeah.
That's a big push into health-focused, grain-free snacks.
Okay. And
then came Poppi in May, a $1.95 billion deal. Poppi is this prebiotic soda that's just, well, it's exploding. Retail sales growth of 122%. And it's already grabbed about 1% of the entire carbonated soft drink market.
Wow, 1% already is pretty fast.
It is. So these deals firmly plant PepsiCo in these high-growth functional beverage markets. Think areas projected to hit like $50 billion to $62 billion by 2027. It's a direct play for health-conscious millennials and Gen Z.
And maybe a hedge against some other trends.
Exactly. It could be seen as a response to things like the GLP-1 drugs, Ozempic, Wegovy, those kinds of things. The ones that might reduce appetite for traditional snacks and sodas.
Makes sense. Leverage their huge distribution network for these new trendy brands.
Precisely. Use their scale to accelerate growth for Siete and Poppi globally.
All right. That transformation angle is compelling. But let's be balanced. Every investment has risks. What are the key ones investors need to keep an eye on here, according to the sources?
Well, the big unknown is still the potential impact of those GLP-1 drugs. How much will they really change consumption patterns long term?
Especially with, 15 million plus Americans already using them?
Right, it's a significant number. Then there's the persistent volume decline in North America. Is that just temporary pressure or something more structural? Currency volatility is another one. With 37% of revenue coming from outside North America, a strong dollar always hurts.
And integrating big acquisitions like Siete and Poppi, that always carries some execution risk, doesn't it?
It certainly does. Integration isn't always smooth, but there are mitigating factors here too. PepsiCo has a very strong balance sheet. They're incredibly diversified, both geographically and across products, snacks, drinks.
And a management team with a pretty good track record.
Exactly. And don't forget that defensive dividend we talked about. It provides a real buffer. Even if you look at the bear case price targets mentioned, maybe $110, $120. That strong dividend yield still offers quite a bit of support around those levels. Suggests downside might be somewhat limited.
Okay, so putting it all together for you, the listener, what's the investment perspective based on this?
The consensus from the source material leans towards a cautious buy. The thinking is there's potential upside over the next, say, 12 to 18 months, with price targets generally in the $145 to $160 range.
Which would be, what, 12% to maybe 24% upside from current levels?
Yeah, something like that. So who might this appeal to? Probably income investors, given the yield. Value investors who are okay navigating some cyclical headwinds. Definitely long-term investors thinking 3 years plus.
And maybe those just looking for a bit of stability in their portfolio.
That too. And given the current market choppiness, the sources suggest maybe dollar cost averaging into a new position could be a prudent approach.
All right, so to quickly summarize, PepsiCo looks like a compelling defensive value story right now, but one that's also actively working to transform its portfolio for, well, the future of consumer tastes.
Exactly. Which leads me to maybe a final thought for you to ponder. As PepsiCo makes these big strategic moves deeper into health-conscious and functional beverages, how might that pressure or influence other consumer staples giants? And how will they adapt to this future focus on consumer health and wellness? Something to keep an eye on.